JPMorgan, the first of the big banks to report quarterly results. They just came out in the last half hour. Leslie Picker joins us right now with more on the numbers. Leslie, good morning.
Hey, good morning, Becky. That's right. JPMorgan shares were down a little bit more. Now they're down about 0.4%. Investors are clearly digesting the report this morning. As you mentioned earlier, they did beat on the top line, reporting $31.59 billion on a managed revenue basis. That was compared to estimates of $30.86 billion. Net income was down significantly for the quarter, down about 42%, driven primarily by this net credit reserve build of $902 million. Net income came in at about $8.3 billion for the quarter. One of the big question marks that investors had about JP Morgan and banks in particular this quarter was what their exposure to Russia was and how each bank fared during the quarter on that front. And with JP Morgan in particularly, this pops up within their markets and securities business within investment banking. They talked about how there was a significant exposure in commodities and markdowns of derivatives receivables from Russia-associated counterparties. That resulted in about a 13-cent decrease in EPS. That we can pretty much read between the lines here and assume they're talking, at least in part, about that nickel exposure that we've talked about on this show related to a counterparty with one of the Chinese nickel producers that caught on the wrong side of the nickel squeeze during the quarter. Also, credit adjustments represented a loss of about $500 million, driven by funding spread widening, as well as credit valuation adjustments resulting from both increases in commodities exposures and those derivatives from Russia-associated counterparties. I know you gave some of the color from Dimon in the release, how he talked about how they remain optimistic, at least in the short term. And I think that short term is going to be something that people really dig into on the call later today with regard to consumer and business balance sheets as well as consumer spending. They believe at this point in time it remains at healthy levels, but they do see significant challenges. Jamie Dimon, CEO and chairman, on the geopolitical front and due to high inflation, supply chain issues, and the war in Ukraine. So still digging through this release a bit more, but wanted to share those details, especially about what's going on with markets and securities and their commodity derivative exposure, guys.
Yeah, and I would say that focus on Jamie Dimon's comments probably pretty important, too. Look, we always look to what Jamie has to say about the economy because he's got a very good sense of what's happening. More often than not over the years, he's been optimistic on things. So when you hear him talk about being optimistic in the short term, but looking and really acknowledging all of these bigger issues that are going to pose risks for the economy, that's significant. He is not somebody who gets his head turned easily by headlines in the newspapers, but he knows that these are some big issues. For him to highlight it, it actually matters. And this goes into this debate about what the Federal Reserve should be doing, how aggressively they should be raising rates to deal with the inflation picture, but how do you do that cautiously without sending the entire economy into recession?
That's right. It's his comments, and his comments, to your point, he's known for being candid, telling it like he sees it. If he thinks the economy is doing well, he's going to tell you. If he thinks that there are issues on the horizon, he's going to tell you that too. Right. So I'm guessing that will be a big topic of conversation on the call. And it's also about what they're doing. You've got a net credit reserve build of $902 million during the quarter. That compares with the release the prior year, which is why you saw such a big decrease in net income. So it's a combination of what his words say, what the color is that he provides about the state of the economy, and then also what they're doing about it.